We'll start. Okay. So before starting today's lesson, we'll recap first what we learned up to now, because today is our last lesson about this unit. So.
Okay. Well, based on the learning outcomes, we have done defining accounting and finance. We looked at the difference between sole trader, partnership, and limited company. We looked at the financial softwares, well, the two financial softwares, Sage and Pegasus. We looked at the double entry bookkeeping rulings. We did cash receipts, cash payments, and bank reconciliation, and we did trial balance. And then you gave us some exercises to prepare the 3 statements, which is the trial balance, profit and loss, and balance sheet.
Good. Okay, yes, we learned double entry bookkeeping as well?
Yes.
Okay, have you started your assignment?
Yes, I have.
Okay, well done. So send me, so I'll give you
I will.
some feedback, before final submission to look around. Informal feedback. Okay, yes, these are our learning outcome. There are supposed to be 4 major learning outcome, which we need to address in our assignment. So define the purpose of accounting and financial management. So we already discussed about what is the difference between accounting and financial management.
Yes, we did.
Between them?
Okay, one, that is financial management, that has to do with applying general management principles of financial resources. Well, it's planning, organizing, and controlling of the financial activities within the organization. Financial accounting is a special branch of accounting that keeps track of a company's financial transactions.
Okay, good. And what is the difference between sole trader and partnership?
Okay, sole trader is one owner, where partnership you have 2 or more, but it has to be less than 20. The sole trader, only the owner contributes the assets to the business. Partnership, each partner contributes to the business. For sole trader, it's usually a small business. Partnership, it's a larger, bigger businesses, for example, like law firms. Sole trader, there's no legal separation since it's just the owner alone. And for partners, well, you have to have like written agreements and those stuff. Sole trader, any losses or anything like that falls on the owner. So, and then if the owner dies, then the business also dies. Partnerships, if one partner dies, the business can still go on. The other person can continue running the business or include other partners.
Okay, well done. Great. That's good. And what about the companies?
Right, the companies, we have the public and the private. The public is unlimited, whereas private has a maximum of 50. The public can buy shares. Private, it is limited to the amount of members in the company. With respect to financial information, the public company can issue that information to shareholders, whereas private chooses whether they want to share their financial information to shareholders. Public company is listed, whereas the private is unlisted.
Okay, good. So public is listed. Do we know how much investment required to be registered as a public limited company? It varies in different countries. Any idea how much?
No, I'm not sure at all.
Yes, normally in the UK, if we want to be registered as a public limited company, we need £50,000 plus.
Okay.
50,000 pounds to be registered as a public limited. Otherwise, we can't. It's other legal requirements as well, but
Okay.
that's the minimum.
Wow.
So that's the minimum requirement. I'm not sure when Fatma will join. She's late today. So okay, I think so. We'll start our lesson. Otherwise, we can't finish, within time.
Yeah.
Okay. Can you speak in?
Not as yet.
No problem. I'm going to share you now. Can you see now?
Yes.
Okay. So we'll go through. So before starting today's lesson, we already recap. So normally our ground rules are there, which normally in class based. So if you have a question, you can ask me. Later on, and today our lesson we are going to discuss introduction to sources of finance. So today lesson will discuss about what are the major sources of finance in hospitality and tourism business, as well as in other types of the businesses as well. We'll discuss budget and budgetary control, what is meant by, and I'll just refer you the chapter of the book is good to read, back reading. And we'll discuss a little bit information system, which we already discussed. We already recap a bit, but we can further enhance our discussion as well. And we'll discuss about value added tax, VAT, because one of our learning outcome is all about assessment criteria, where we need to discuss about the VAT, what is meant by VAT. In your country might be in various other country. It's not well, we normally not called VAT. We normally called GST, General Sale Tax. So it's no difference when you write your assignment. You can discuss about GST, General Sale Tax, or any other tax. So
Hi, sir.
Hi, welcome, Fatma.
I'm sorry.
No
I'm so
problem.
sorry. I wasn't checking the time.
Sorry?
I wasn't checking the time. I've been in the kitchen cooking all day.
No problem. Let's we'll start, and it's a recording call. So let's then at the end of the lesson, I wish we'll be clear and we'll achieve our objective of this lesson, which we're supposed to be discuss the sources of finance. You will be in a position, and end of the lesson you can describe me budget and budgetary control and explain me what is meant by VAT, input and output tax. So okay, what do we know about the sources of finance? What are major sources of finance where we can raise the money?
Through bank loans.
Okay.
Could you also, well, in tourism and hospitality, do they use debentures? And lease financing.
Okay, good. Yes, lease financing. Yes, Fatma, any other source of finance? Yes, bank. Any other? Okay. In terms of the company, public limited company, especially major source of finance.
Could they also use share capital?
Yes, well done. We can issue shares to the public to raise finance.
Okay.
Yes, government investment can be, government can be invest money. Yes, that could be a sources of finance. We can request, the government to be inject money in the system within a company. So different country have a slightly different sources of finance. Yes, we discuss about lease. Every source of finance we have advantages and disadvantages. One is called debt financing, other we call equity financing. So debt is something which has to be repaid.
Yes.
So finance, one of the sources, we'll go to the bank and we'll raise the money, and that will be a source of finance. There are various other sources of the finance we can use. Each one of source of finance has own advantages and disadvantages. So we need to look around the company position. We need to look around, do we want to be short-term commitment or the long-term commitment? So we need to be, if we have a long-term commitment, we need to think about, what impact will be on the organization. Before making the decision, we'll go through the bank loan. If we'll go through the bank loan, if we can't make the payment every month, like in terms of the interest are repaid, so we are putting ourselves at quite risk. Lot of theorists and analysts normally say debt financing is cheaper than equity financing, because when we issue to the shareholders, to the public, we're losing our control on the company.
Yeah.
And normally we need to pay more higher dividend than the interest rate. So that's why debt financing is cheaper than. But up to certain level, if we have a too much debt in the company and we can't afford it, so we can't pay back them, so that could be quite risky. So next, we can divide the sources of finance into short term, medium term, and the long term. So today we'll discuss about short term, medium term, and the long term debts. So short term, trade credit. Yes, if we need to buy any stuff, like our supply, our raw material, we can get the trade credit, like 90 days credit, we'll pay them back in 90 days. That can be one of sources of finance. Bank credit facilities, like, bank overdraft. One of, the credit facilities can be sources of finance. It can be short or the medium type of, even in some cases, we can go through the bank loan is the long and the short term as well. Bank loan for 1 year. So when we are talking about the short term, in short term definition, we are talking about within one financial year.
Okay.
It's a 12-month loan. So when we borrow the money for 12 months, we call short term finance. Then next we have a debt factoring. Debt factoring, like, if we have a customer, we want to receive the money, we sold something on credit to our customer. We have invoices. We can give these invoices to banks, and we can raise the money as well. And invoice discounting is almost the similar sort of the thing where we can discount. Like if we have £100 worth of invoice, we can give to the bank, and we can say, okay, let's bank, every £100 of invoice can give us £80, £90 worth of credit. but they can receive £100 from the customer.
Okay.
So that's one of the sources of finance. But in this case, we are losing a lot of money out of it, because every £100 which we receive from customer, we are getting £80 or £90. So £10 every £100 we are going to lose. So we need to look around. Is it best option to go ahead or not? But is advantage, it can be a quicker, and we can raise the finance, is quite quick through this route. And the next, we're looking the higher purchase. Higher purchase is sort of you purchasing, are you getting cars on the higher purchase agreement, where you're paying the interest on it. But at the end of, you are hiring something. And the next is the financing, is a lease. Leasing can be two types. It can be finance lease and can be operating lease. These can be short, then these normally is a long term, but can be couple of leases, medium term, or because 3 to 4 year lease, or more than 5 year lease as well. So they
Yeah.
know how. So these are like explanations: trade credit, bank credit facilities, bank loan, debt factoring, invoice discounting, hire purchase, leasing. So we need to remember that I have two types. One is called operating lease, one is a finance lease. What is the difference? What is the difference between finance lease and operating lease?
Well, the finance lease gives the person who is going to release the asset right to use the asset for a certain amount of time.
Hmm.
I'm not sure what operating lease is.
What about the operating lease?
I'm not sure about that one.
Okay. The major difference, risk and reward in take of the finance lease, the leaser and the leasee with the person who get the lease will bear the risk and reward. Like if I'll buy a car through finance lease, the car will be the title of the car. I will own the car. But if I have a operating lease, so end of the maturity lease agreement, its car won't be my car, and the car I need to be returned to the lease company.
Okay.
So other benefit is if I have a finance lease, so in term of the finance lease, I can claim capital allowance from the tax office. Do we know what is meant by capital allowance?
No.
Capital allowance is mean we can get the reduction or the rebate on the tax. So we're not going to pay the tax in the first year.
Okay.
And we can depreciate our asset, like a depreciation of the asset, and we can put as an expense in the book of account as well. But if we have an operating lease, whatever the operating lease is like a rent agreement. So in this case, it won't be our asset at the end, but the asset maintenance will be bear by the person who gave us lease or the company. But so rent will be as an expense for the business.
Okay, so it comes like regular renting in a sense, because based on the finance lease, right? They're saying, well, the leasee has the rights to everything pertaining to the asset. So the lease operating or whatever it is, that means that the leaser still has control over the rights of the asset.
Yes. In terms of the if we'll get the finance lease, it's become your asset.
Right.
But you have to repair your asset. You have to look after. Actually, another way around, you are buying this asset. The 10 years, you have to make the payment.
Right.
Like a mortgage, in a house. Have a repay mortgage after certain period of time come your house.
Yes.
Have a interest only mortgage. It means you're paying the interest only, but end of the maturity asset can be the bank asset back, or you can pay to market value of the asset and you can buy the asset, from the bank.
Right. Yeah.
But in term of the finance lease, we can show in the book of account in a balance sheet as an asset. But
Okay.
if we have operating lease, we don't need to show in the balance sheet according to the current ISs. We can only show in the profit and loss as expense of the rent which we are paying.
Okay. All right.
So that's only difference.
All right.
Any question?
No.
Okay. Move to next. We're not doing activity, but please you do your own, yes, as a separate. So in terms of the time, the activity is
Okay.
to complete the short or the medium term pieces of fun. And so in your assignment, you can even discuss, you can include this activity which we have created. So
Okay. Did you send an email? I think I saw you send an email with some activities, right? Was
yes,
it that?
yes, I send you the. I'll show you during our lesson, and how we can calculate.
Okay.
Good few questions, that will help you to be answers there as well. But I'll explain, how we can calculate the VAT, because one of learning outcome we need to address as well.
All right.
Okay, and then we have a capital, and this is a long-term debt, 10 year or more. We can like a mortgage,
Yeah.
term loan, bond. What is meant by bond?
Bonds.
Like you might be heard about, we call corporate bonds. Every government, every country have a bond there, which is called Euro bond, or various other type of the bond. Bonds is a sort of the source of finance, but some bonds is a secure against the asset. You have a property, and that against that property you issue the bond, and that bond, like the bond value is, let's see, 200,000, but you're getting 160,000 pounds from the person, but end of the maturity, when the bond reach at the maturity, so you have to pay back 200,000.
Do you pay back with interest?
No, basically, the sometimes we can pay on the interest as well. Term and condition can be slightly different of the bond, but normally the bond and the value of the bond is written like 200,000 pound,
Mm-hmm.
but you're getting 160,000 pound, but you're giving the piece of paper which is written 200,000 pound.
All
But
right.
in 10-year maturity or 5-year maturity, when the bond will be mature, you will have to pay back 200,000.
Okay.
So these are, and some even can be a before maturity, can be redeemed as well.
Okay.
So mortgage, term loans, debenture is a sort of loan as well, which is the right piece of paper which we, and that's the long term as well.
Okay.
Convertible loan is mean you can, if we'll borrow the money, yes, loan we can issue after 5 years or 3 years, we can convert the loans to, we can issue shares to the person where we borrow the money in term of the loan. So it means that's convertible into the stock, which is stock meaning the share, share capital.
Okay.
And lease back, like we are selling, but we have a right to be leased back as well, or lease out. This is one of other sources of the finance.
Yeah.
Or one other is called shares. We can issue shares to the public.
Okay.
These are all the term and condition of these bonds. Like the long term bond can be 10 years, 7 to 10 years. It can be secured. Yes, whatever
Yeah.
the source of funds we are using, we're looking in terms of the tax benefit, in terms of the short-term, long-term benefit, in terms of the impact on the cash flow. We thinking how much will be control. If we give all the shares to the public, we are losing our control. They can change the management because shareholder become owner of the company and they have a right to give the vote. And when they give the vote, they can change the management.
Yes.
So that's these things, you know, we need to look around in our mind, you know, when we'll get different sources of finance.
Okay.
So equity, we already discussed, you know, equity mean the shares. Yes. Different, you know, there are charges. Dividend, which can be vary. We can pay 2 pence dividend, we can pay 10 pence dividend, we can pay 20 pence dividend. But most of the company dividend policy will make consistent. If we are paying 10 pence every shares this year, but the next year if we give them 5 pence dividend, the people will think, come on, company gave us less dividend this year, so we'll take out our investment, we'll invest in other company. So that's why the company wants to keep the consistent policy. We can give 10 pence this year, and next year we can give them 11 pence. But not give them less than 11 pence. If we'll give them less than 11 pence, that will demotivate our investors.
Yes.
So any question? You both, any question?
No question.
Okay. One other source of finance is called venture capital. 2-3 companies, they come together and they invest in the big project. It's called venture capital.
Say again, 2 separate companies come together?
Like, you know, let's see, in your country have a airport project, new airport is building. So different companies, they come together and they invest in these projects, in these big projects, and they combine their capital as a venture.
Okay.
So these are all, you know, different sources of finance. Any question?
No question.
No question.
Sometimes we have a reserve. A reserve means the last year profit, previous year profit, we put as a reserve, return earning. So we can use that money in terms of the sources of finance. It's our own money, which we not distribute to the shareholder. We kept it as a reserve, and we can, you know, so we can use it.
Okay.
So these are further sources of finance. Next next area of our discussion is a budget. Know what is meant by budget?
Well, a financial plan of where allocated monies are going to go to.
So budget is a financial plan. Budget helps us to control the activity. Budget helps us measure the performance. Budget helps us to identify the variance. What is meant by variance?
Identify the variance?
Yes.
Not sure what that is.
Give me variance.
Hello?
Yes, hello.
Okay.
Okay, what do you mean by budget? If we discuss budget.
I'm hardly hearing you with the noise.
Oh, I think so from Fatma's side. Fatma, yes? Can you hear me?
Yes, I can hear you.
Okay. Next, you know, we're looking that, yes, we discussed budget is a financial plan, budget help. What is meant by variance? Anybody ever heard variance?
Variance.
Yes.
I've heard it before, but I can't remember what that is.
Okay, variance is a difference between the budgeted and actual. Budgeted figure and actual figure. I budget, I'll pay £10 per hour to labor, and the labor budget. Actually, I paid £12, so £2 I paid more than the budget.
Okay.
That's called the adverse variance, unfavorable. Because I plan, it's not in my favor to pay more than I budget.
Okay.
I budget but to buy £10 per kg my material, but actually paid £12 per kg because the prices increase. So now my variance is adverse. So budget helps us clear the variance of the variance can be favorable or adverse.
Okay.
Types of budget. Okay. To make any budget, first step we need to forecast the sales.
Okay.
How much sales will be. And the next, when we have a forecast the sales, then we can make the production budget. Production budget, we can make it opening inventory of the finished good last year. And we can take out the closing inventory of the, and thus help us to make the budget of based on the sale forecast.
Okay.
I have already included and I sent you the question about the budget in our second lesson, I think so. If you remember. So please just go through. We can if we need to. Okay.
All right.
It's not. We don't need to be too much, discussion, but we try to keep simple because keeping in view of the learning outcome, we need to look around the budget and budgetary control, but we don't need to be actually prepared. We can prepare the budget to demonstrate, but we don't need to be too much, on the, but it can be different type, but it's good to know. We can make the labor utilization budget, we can make the material usage budget, we can make the material purchase budget, and then we can make the cash budget. Cash budget already did activity, yes? I saw the templates as well.
Yes, I saw them.
Okay, budget can be defined as a target. Budget can help us cash receipt and payment, sales, stock requirement, labor requirement, all. Budget or the budgetary control is planning, coordination, communication, motivation, and control and evaluation. So budget help us to plan, budget help us to control, budget help us to communicate, budget help us to motivate in individual. Yes, last year your performance was wonderful. You stayed within a budget. Yes.
Yes.
So we can, the control why you spend our spend. That's only the budget. That's the budget. Provide us all these tools. Any questions?
No questions.
Okay. Next, we looking the VAT. What is meant by VAT?
Value-added tax.
Okay. Before going next, I'll just show you the chapter of the book, which is good to read. So please do your background reading about budget and budgetary control. Yes, because one of your learning outcome is about the budget and budgetary control.
Yeah, budgetary control and revenue management.
Yes. So you will see there what is the budget, what is the budgetary control, types of budget. Yes, what is meant by variance. It's all been explained and good examples we can use as well.
Okay.
So please go through this document that will help you in terms of the budget.
And the cash budget examples that you would have sent, we could use one of those to demonstrate how to prepare it based on the learning outcome.
Yes, if we'll go through the learning, the first is the define the accounting, which is a straightforward. Second is the critically analyze the difference between sole trader, which I'll give you now. The slide is at the end of the slide. We discussed software.
You sent that to me.
Sorry?
I think you sent it because I have that.
Oh yes, I think so. I already sent you as well. Okay.
Yeah.
Then we have a next is explain the financial software, which we discuss. Some software, Sage, Paxis, and various others. So please you can discuss and you can explain them their use.
Yeah.
We discuss about rule of double entry bookkeeping, how this help, and we a lot of examples. So please explain what is meant by double entry. I'll send you separate document for it as well and then describe the calculation. Yes, here we need to be describe how to calculate. Yes, on the purchase, I have included lot of example in today handouts. So I'll show you. I'll demonstrate. So if any questions, so please ask me.
Okay.
So next now, let's explain the role of cash receipt, cash payment, bank reconciliation. Okay. So I'll demonstrate, explain the cash receipt and payment, which is the cash budget, which we discuss, receipt and the payment.
Yeah.
Can explain, you can include, the bank reconciliation. I'll further demonstrate. We discuss about the trial balance and explain how you can prepare. You can pick, any example you can discuss in your assignment and explain what is meant by trial balance.
Okay.
Then we discuss about trial balance along with the adjustments. Prepare the trading and last. I send you one of the document which is shows all these financial statement, and we discuss already how we can prepare in one of lesson. Please just follow the handouts, financial statement, which I already send you. Then today lesson we discuss about the sources of finance, how we can raise, and the types. That will help you to address the learning outcome. Today I discuss you again the budget and budgetary control and explain the role in hospitality industry. So just relate in hospitality industry. Why is the budget, especially material budget? Think about, if we don't have a stock, so you can be, yes, if you have a too much stock, can be expired as well. So the budget is very important, and that help us to control. Just demonstrate how to prepare the simple cash budget, which I already sent you, and in this, the document which I just shown you, budgetary control, there is a cash budget as well. So please, you can go through as well, and you can demonstrate, in your, that's all your assignment. I'll go through with you VAT. VAT is a value added tax. In UK, if you have 87,000 pound turnover, it used to be 83, 85. No, this year is increased, and again every year, slightly change. 87,000 pound. If your turnover of the company, if your sale is 87,000 pound, you must have to register VAT. It will become a compulsory registration with HMRC, and you have to register. The VAT
for us here is after about 3 to 5 years that you have been in business, and if it is you are making like about 60 to 80,000 TT dollars, then they will tell you that you could charge back all those things.
Okay, so yes, you can quote example, because every country have a different. So VAT in UK on the purchases we call input tax. Anything
income tax.
We call input tax. When you sold those things, when you sell those, we call output tax.
Okay.
So input tax we pay as a company, output tax we charge from the customer.
Yes.
Difference between them we'll pay to HMRC. So what is input tax and output? What is the rate in the UK? In the rate in the UK for the businesses is a 20% VAT. Fuel, if we'll put the 1 liter fuel in a car, we have to pay every pound 20 pence value added tax.
Okay.
So 20 pence state goes to government. Top of government include is called fuel duty as well. That's a separate tax, which is at around 30 pence. So it's good.
Okay.
Every pound worth of the fuel is going around 50 pence to HMRC towards government as an income.
Okay.
Okay. So I'll I have quoted few example. I have prepared few handouts for you, which is I send you in your. This handouts is about how we can calculate the VAT. Like here, if we'll sell things like 52 pound and 20 pence, 20% VAT on it is mean 8 pound and 70 pence, and the total value will become before VAT is 43. Yes. 43.50 pence. You calculate 20% VAT, which is 8 pound 50, and the total gross will become 52 pound and 50.
Okay.
For VAT is things 18 pound. You calculate 5%. We have a few things in the UK, like some foods item. There is a VAT is a 5%. If we have a home phone, using home phone in our house, or some gas electricity bills, we have a 5% VAT. But all others we have a 20% VAT.
Okay.
So that's why it's a different. And some can be a flat rate. We're not claiming from the HMRC, or we're not paying. We have a one rate, like 12%. We'll pay state 12% to HMRC.
Okay.
So these are the I send you one separate the handout, which is a handout is a question. One handout is your answer. Like this handout is a question like task. Yes. So this handout is showing how much is customer allowed 20% trade discount. Trade discount means when we buy things in bulk. Then we offer settlement discount. We don't need to know a lot about the settlement discount, but I just is already prepared a handout, so I send you. Settlement discount, if somebody pay within certain time, we'll give them extra discount 2%. Like we always take out the discount, but we take out the discount either person will take or not, and then we calculate the VAT on after taking out the discounts.
Okay.
This is just VAT, HMRC increase and this. So just go through. It's don't need to be compulsory. You're aware of everything. So that will give you some understanding about tax. Yes.
Yes.
Not get it any questions, so please ask me. But most of them you will get when you go through these. Huh?
Yeah.
Okay. I will send you one. I send you one other this article as well, which is quite good. That will explain you how we can calculate the VAT.
Okay.
Show the 1240 pound VAT. What is the VAT? Yes, how much is VAT there? How many? When is it due? All sort of things. There is a self. So please, in your assignment, you just need to pick one example to explain. What is the VAT? How much is the VAT can be on input and output? Input VAT mean on the purchases. Output VAT mean on the sales.
Okay.
Hospitality in a hotel, we buy any raw material, any inventory, any stock, we'll pay input VAT. And when we'll provide services, or when we'll serve the customer and we'll give them invoice, and they make the payment, we'll charge the output VAT.
Okay. All right.
So that's there. Any question?
No questions.
Okay. Then next I already put it this document, difference between sole trader, partnership, limited company. So please go through.
Yeah.
And that will help you to clear and address your learning outcome.
Yes. I think you sent one before.
Yes, I think so. I already sent you the document, whole document, which is and everything. But that give you further, on the slides.
All right.
Recapping. And user of financial statement, what type of financial statement information provide, and who they are, those people, why they are using these financial statements. So I just put it there, the user of financial statement and the press.
Okay.
So please go through these, and Yes, we need to work on assignment really now.
Yes.
Any question?
No questions.
Hello, Fatma. You okay?
Yes, I am, Tata. I'm just going
Okay,
through
brilliant.
what.
So please, you start as well your assignment. If you have any question, you can send me email. I'll call you and I will discuss,
Okay, I'll just try to finish it up, then send it to you first. If you need to do anything about it, then you let me know.
Yes, sure, And,
Yeah.
okay. If any question, anything, let me know. So we'll carry on moving. Yes, we'll carry on finish assignment. We'll carry on marking and we'll finish our course, on time then.
Okay.
Okay,
Okay.
brilliant. If you have any question, ask me, yeah?
All right.
Yeah, will do.
Brilliant.
When is the deadline? When would be the deadline for this one?
We'll say, normally we keep 2 weeks,
Okay.
General rule just for 2 weeks. So try to be in 2 weeks time. You send me assignment. I'll give you feedback and you upload and I'll give you summative feedback when we'll submit through online.
2 weeks
Okay.
time, yeah?
Okay, brilliant.
At end of the month, yeah?
2 weeks from today's date, 2 Fridays.
That's end of the month.
Yes.
Yes, he's right, because yes, 28, 29, yes, something.
Yes.
And then we'll start the new unit from next week then.
Okay.
So we'll keep moving and we'll carry on doing after every 4 weeks 1 unit, yes? And then we'll
Yes.
finish our course.
Okay.
Okay, have a good weekend.
Same to you all.
Okay, thank you.
Happy
Have a nice Easter. You too. Okay, bye-bye.
Bye.
Try to upload on Moodle as well, please. Okay, there is a book as well on Moodle if you want to use it.
Yes, I downloaded it. So
Yes,
I've been
my
reading it.